Revelations from my man cave. My name's Jeff Banks and I'm from Property Portfolio Solutions, and yes, I'm in my man cave, but I brought my big whiteboard today because we're going to deal with a big subject, and it's a subject that sometimes gets property investors into trouble, and that's GST. Here I have 5 words or 5 terms starting with E that doesn't make GST easy. It makes GST something that we have to think about as a property investor / developer / owner. Now, when it comes to property, most people think GST is not applicable. Now, technically speaking, that's not correct. GST is applicable to every transaction unless we have an exemption. And the residential sale of a property between an owner who has lived in it to an owner who is only going to buy and live in it is exempt from GST. That's clear, that's easy, that's probably 99% of normal transactions. Where GST becomes applicable is when we start talking about enterprise. Now, buying a property and renting it out to someone is not an enterprise as defined under the Act, unless we're talking about a commercial property. And a commercial property where the turnover or the rent is more than $75,000, then GST has to be applicable. That's a conversation for another day, but here we're talking about buying a block of land, perhaps building a property or a couple of townhouses on it, and then holding onto them or selling them, and whether then GST becomes applicable because we've now shown what's called enterprise under the tax laws. Third one, expert, is your accountant. If you think you might have a problem, you should definitely be talking to this person because they know the tax laws, they know what's when and how GST might be applicable to a transaction, and they will then get you registered, get you getting your refund for your inputs, charging GST where it's applicable at the sale, and so on and so forth. They will make sure you've got the right evidence so that in the time that you might be examined or audited by the tax department, you have everything applicable. So let's go through a very quick scenario and work out whether some GST might be applicable. So I go and buy a property. I think, okay, I'll put a townhouse development on it and I'll put 2 townhouses on it. So we'll have a common wall. And because I extended myself nice and fully to leverage myself, I think I should sell off this one and hold this one. Now, under the GST laws, if I'm engaging in a business or showing enterprise and my turnover exceeds $75,000, then I have to register for GST. But we need to be careful that here our evidence shows that, well, hang on, if I'm going to hold this one and rent it out long term, that I'm actually not showing enterprise in relation to that part of it. I'm only exercising enterprise in relation to this part of it. So that even though I'm registered for GST, I can only claim the GST on the parts that relate to this side. See why I need an expert? We need to make sure that our evidence will pass examination as we're going along. We know that GST will be applicable to this side. I'll get a refund for the inputs that come to these ones here. I'll get no benefit either way here other than the GST will become part of the cost base for when I sell it, if I sell it down the track. Now, there are other rules we need to be careful of here, so we need to be careful with our expert because here there is a 5-year ruling. Now, that's not law, it's only a ruling. And on the other side of the case, if I move into this side, I could very well have the 6-month determination to deal with. Still, GST is not applicable because I now have used this as a residential property, but this rule, or this determination here, and this determination here can be in conflict if the evidence doesn't show what we're aiming to do. If you've got evidence showing that, yes, my expert told me to move into this because I can use that to get past the capital gains tax issues or the GST issues, then in examination, that will probably fall over because you've done something specifically to avoid a tax. Now you need to be careful. That's what's called Part 4A of the Tax Act. But that's again a discussion for another day. So when it comes to GST, we need to remember the 5 E's. Exemption, in a normal situation, GST doesn't apply to residential property transactions, the rent, the purchase and sale, in a normal sense, so buying an ordinary property from one to another. GST is applicable to the first sale of a new asset. And there's another discussion for another day, that if I've got a residential property on a big block and I cut it in half and sell the block off, do I have to pay GST, or will GST be applicable? Now, that question comes under enterprise, because you look at whether I'm in the business of doing that sort of stuff, or am I just simply realising an asset? Again, your expert needs to be engaged in that particular situation. If your evidence here says, well, hang on, I bought a property 12 months ago with the intention of splitting it and flogging off one of the things, you're definitely showing enterprise, even though you're outside the 12 months or the 6 months. Again, your expert needs to be part of the discussion. And we don't want the audit or the examination, so we need to be careful. When it comes to GST, you need to talk to your accountant. If you want to talk to us about it, I've had 40 years experience in property transactions. I know enough to get a reasonable determination of what's going on. But at the end of the day, you should be talking to this person, your accountant, on a regular basis when it comes to your property transactions. My name's Jeff Banks. I'm from Property Portfolio Solutions. I bring 40 years, as I said before, of tax experience to the table. If you want to talk to us, that's as easy as www.propertyportfoliosolutions.com.au or sending an email to info@propertyportfoliosolutions.com.au. And remember, at Property Portfolio Solutions, your legacy is our inspiration.